The last few weeks for traders have been very difficult. We have seen injection in prices of options, we have seen crazy falls, and we have seen really big gap ups and gap downs. And I've seen a lot of traders on Twitter on one side saying that they've had their biggest losses in their trading career, and on another side saying that they're going to stop trading once and for all. And I thought that this video was the need of the hour. In fact, it is a highly requested video. I've had a lot of requests on my Instagram account, also on our WhatsApp number as well. People asking me, how do I bounce back from the losses that I've had in the market over the last multiple weeks? Some have losses ranging from 1 to 2%, some have losses ranging from even 6 to 8 or even more than that. So how do we deal with all of these losses in a very structured format? That was a question a lot of people were asking me, and that is what this video is about. This is Ajay Ajith. Let's get started. So talking about myself, I was a discretionary trader up until moving to a rule-based systematic trading strategy. So I design and I trade automated trading strategies. But this was a framework which I was following while being a discretionary trader, and I think it would still apply for a lot of you as well. So overall, in the structure of the video, we are going to discuss a few things: how to bounce back from losses in an emotional capacity, and how to analytically look at it as well, when to change your strategy, and when to think about stopping trading once and for all. I know it's a tough and difficult question, but I feel some of you might fall into that category as well, but it is okay. We'll first go through the first two steps, then only if needed we'll go into the third and most drastic step. So first we'll quickly look into my automated trading strategies as well and see how much P&L that they've made over the last few weeks. Right? Let's quickly look into it. So as you can see, the last week was kind of difficult and a loss of around 2% was booked in this account. And over the last multiple weeks also, the market has not been kind. There have been a few losses, and comparing to the incredible month of March, April was very, very difficult, I would say. So the first question here is, what is a big loss? For you and me, the definition of a big loss might be difficult. And if you're also doing the automated trading strategies with us, do not worry. You might be sometimes seeing a slightly better PNL than what is being shown here on my account. Sometimes you would be getting a slightly worse PNL as well. This depends on the strategies being selected. Some of our internal strategies being slightly more aggressive. But I would say do not get worried about it. Most of our strategies are diversified in a way that we are going to see a very smooth PNL curve. So do not worry much about it in this situation. So yes, when we're getting into the framework, the first thing to ask yourself would be, what is a big loss for you? Your big loss or your definition of a big loss and my definition of a big loss might not be the same. So it is upon you, based on your current trading style and your historical PNL or the strategy historical PNL, to decide what is a big loss for you. For me, a 2% loss might be a big loss, right? But for you, even a 10% loss might not be such a big amount, because you're such an aggressive trader who makes more than that in a good month. Your 1 or 2 losses here and there for a big amount might not be difficult. But for me, in my perspective, I am going to say that anything more than a 3% loss in a particular week, I am defining it as a big loss for me. In fact, I would ask you to pause the video and go to the comment section and comment down for you, based on your trading style and your historical PNL curves, what is going to be a big loss for you? What is that percentage of loss in a particular week which is going to be a big amount for you? So if that is done, let's go ahead with the rest of the video. So getting into the framework here, the first one, which I know it is a bit counterintuitive, it would be to take a pause from trading. But in my experience, this has been very crucial, because often as a discretionary trader, you are driven by emotional trading decisions. Sometimes that makes you a lot of money, sometimes it causes you losses as well. But that is not what we are talking about. When you go into a loss, your emotion changes in such a way that you have to get back from that losses. So as a discretionary trader, you end up making more and more losses. It is a sad reality of what happens with a lot of traders. And in fact, it is very difficult. Controlling your emotions is going to be the most difficult thing across your trading journey. In fact, by the end of the video, you will even understand the perfect trader is going to be someone who has no emotions. I would personally suggest no more than 2-week pause from trading. But the question is, how long do you need personally to get back emotionally into a state where you're no longer concerned about that amount? You have to make peace with that amount and you have to start fresh. If you're going to get to the trading terminal every day and keep thinking about how do I get back from that big loss, how do I get back from that big loss, then you will end up being caught in more and more losses. So I would say take a break from the trading screen for around 2 weeks. You should be getting much more revitalized mentally. A loss of 3 to 4% is kind of expected in the market, even though it might fall beyond your system. It is okay, right? You can still get back if you follow the rules properly and if you're trading with a very logical mind. Now, if you're an algo based or automated trader, the things here might be slightly different because the strategy itself does not have a mind of its own, or it does not have an emotion of its own. And if you let it run its course, you would often see that the times after a drawdown period are often the best times for a strategy. So that is why I call this method a bit counterintuitive, because the best times for a strategy are after a drawdown, historically based on a lot of strategy that we have backtested. But again, the emotions part of it, as a discretionary trader, you should not forget about it. So after 2 weeks, you're coming back into the market and you're all set to go. But again, you're coming up with more and more losses. You've sorted out your emotions. You know for sure that you're following the strategy as it should be, or you're following your conviction as it should be, but then you're once again going into losses. So what should be done there? That is where the next part of the framework comes in, which is modifying your strategy. So you come back into the market and once again you're starting to trade your usual style of strategy, but again it's not working out. What do you do then? So in the time that you took a break, I would not suggest you to pause or rethink about your strategy, because in any trading strategy in the stock market that we have today, losses are going to be a part of it. That is okay, right? The main and important objective is to stick to the strategy and run it for the long term. So here, the modifying the strategy, a framework part, you should have to take it very seriously and very carefully as well. So in order to make sure that I was not taking any stupid decisions by going ahead and changing my strategy really fast, the rule that I had set for myself is that if the strategy crosses its historical drawdown by a significant amount, I will go ahead and modify the strategy. Okay, for perspective, if a strategy that I had designed or developed, or even if I'm a discretionary trader, if it was giving me around a figure of 8 to 10% drawdown, I would not go ahead and modify the system at once if it gives me a 10% drawdown. I would wait for a period. I'll give it even a buffer amount. I would wait for, let's say, 15% of drawdown to decide I should go ahead and modify the strategy. This is because it does not say anywhere that historical patterns in your PNL will be repeated, although you might see it sometimes. The drawdown figures should not be taken as a rule book for you, right? You should always give it a buffer amount. So if you're a discretionary trader, go ahead and plot the PNL curve out of your last multiple months of trading and see if you have had a big loss like this previously before. If you have had it before, then it is slightly okay. If you have gone into a dip and you have gotten back from it, it is okay, right? That means your strategy or your decisions have been proven right before. But let's say the biggest loss that you've had before is a loss of 5% on your trading capital, and now also you've gotten a loss of 7.5% or more. And here I would go ahead and follow the 1.5x rule. If you have had a loss of 5% as your biggest loss before, and at this particular time period you're having a loss of 7.5%, which is 1.5x of your previous highest loss, then you can go ahead and think about modifying or changing your strategy. Again, this might be a bit different if you're having a strategy with a big drawdown, but personally I have seen that most winning traders, most logical traders do not have any big losses or big drawdowns in their history, right? So when I say modify your strategy, it does not mean completely change it, right? Because I'm assuming that you were a winning trader and this strategy or this trading style used to work for you. It might be small changes that you bring into your trading style. For example, if you're someone who always enters a trade at 9:30 a.m. and you see that for the last 1 month there is heavy volatility around 9:30 to 9:45 a.m., you can think about modifying your strategy to, or your trading style to enter that trade only at 10 a.m. So again, this is just one style of modification that I was talking about. You can similarly set max PNLs, max losses in a particular trading day, and all of this to kind of modify or play around with your trading style. And I would also say, if you're a cautious trader, trade with a slightly lower capital until you get a hold of that modification, right? Not all modifications or corrections are going to be good. So until the fact that, or until the time that you're convinced that this is the way to go, you can think about reducing your position sizing and playing with a smaller capital. So again, months go by, you're modifying your trading style, but then things are not really working out for you and you feel like trading is not your game. I know this is the most difficult part of the video. What do you do then? A lot of months go by, multiple quarters even, and you're not able to get back into profits. Then this particular module is going to be for you. Listen very carefully. It is not going to be very pessimistic. It is going to be a realistic answer for you to stop trading or in fact change your trading style. So in this part of the framework, first let's discuss what is going to be that time frame. The time frame which I had set for myself is one entire quarter. I would wait and see how the strategy or my trading style was performing, and I would give it a red flag. Right? If it was not performing at all during that last one quarter, I would red flag it, I would reduce my position sizing, and if in the next quarter also that trading style or strategy is not giving me any good returns at all, I would think about scrapping that strategy altogether. And if it's not working out in the second quarter, I would reduce my capital there and I would continue trading. And if 2 quarters still nothing works, then go ahead and change my trading style. Again, I'm emphasizing that a change in trading style might also be good for you. Some of you might be option buyers currently and you would be thrilled with the kind of profits that you see on good days in the market. But when things go bad or you feel like that entire trading style is not fitting for you, then you might even have to shift into something like option selling. Right? It is completely different style of trading. That is what I'm trying to tell you about. Or you may even go into equity trading, or as an option seller, you might decide that you're better at catching directional moves and decide to move into option buying. Right? So you get the perspective of what changing a trading style means. And then the question comes, when should you stop trading once and for all? That question is going to be very subjective for you. I would say as long as you have enough capital and your life is not affected in any way with your trading losses or the time that you're putting into the market, why not continue trying to master it? It's a skill that will anyway take many months or even years to acquire or perfect. So you should keep on trying as long as that time and amount is not causing a big problem in your personal life. So summarizing the framework, first take a break or pause from the strategy. Second, think about modifying the strategy. Think about bringing in small changes to the strategy. And the third one would be to entirely change your trading style or the strategy itself and rethink about the priorities in which you have come into the market. So overall, before summing up the video, I would say if you're going through this journey as a trader where you're having a rough period, the most important thing is going to be your emotional capabilities. I would say that it is going to be the time that you spend in the market, the amount of effort that you put into the market despite having losses, that will make you a better trader. If you're having the drive to study more, then continue to be emotionally sure about it. And the third and most important thing, not blow up your capital in this journey. And if you're wanting to learn more about capital sizing or position sizing and capital management, I've done a beautiful other video. You can check it out here. And for this video, yes, for this video, we are done, and that is all I have to discuss with you guys. Trade intelligently, trade safe, and be emotionally strong. I'm sure things will go the right way and you will be ending up in profits. This is Ajay Ajith. See you in the next video. Bye bye.